Good evening, everyone, and welcome to the first edition of a new program called Thrive and Grow, where we are hoping to empower you to be the best you can. And the reason I got an idea to do this show is primarily from the fact that all of us can make a difference, provided we are able to understand what it is that we need to be able to make that difference. The difference can not only be in other people's lives, but primarily in our own lives. And that is something that we will be able to do when we understand a lot more about very many different topics, and which is going to be my endeavor to bring to you. We start the series with a very interesting topic from a very dear friend of mine. We have with us CA Paresh Desai. Good evening, Paresh. Welcome to the show. And everyone who's here, Paresh is an expert. He's an expert educationist as well as somebody who has grown to have a lot of experience in trading of stocks. Paresh is going to today tell us how to pick stocks using technical charts. And Paresh has got over 20 years of experience. He has been, he's a qualified chartered accountant. He's been practicing. He has worked with many corporates, but his passion is actually teaching. And that's what he's here for today. So before we go into what Paresh is going to do about helping us pick stocks using technical charts, he's going to also tell us a little bit about this entire, stock market scenario. What are stocks? We're assuming that you want to start from scratch. We are not assuming that you know everything and you just come for recommendations. Okay, so Paresh, I would request you, and as we've discussed beforehand, what we would do is we would like you to tell us a little bit about this entire stock market scenario. What it is, what all does it involve, how is it that this works basically, and in terms of then you can go into what it is that people can do as far as stocks are concerned. So Paresh, I am handing it over to you. Thank you very much and for being here. And please, I would like you to also introduce yourself as how you see yourself and how you would want others to see you too. Over to you, Paresh.
Thank you, Sandeepji. Thank you. And it's an honor to be on this program, Thrive and Grow. And as the word itself says, thrive and grow. Okay, we have to thrive on whatever situation we have right now. See, the situation of pandemic is there. There's chaos all over. We can't go out of our houses. Okay, all the businesses are going down. People are losing their jobs. But in spite of that, life goes on, right? That is the one thing which is going to go on and on. Okay, till the time there is life on earth, we have to keep on going on. Like they say, the show has to go on, right? So come whatever, we have to continue. We have to earn income. We have to support our family. We have to support ourselves. So as you said, growth has to be there in the economy, in the industry. But first, growth has to start with ourselves first. Okay, as they say, charity begins at home. So first we have to think about ourselves, that how we will thrive. Only then we can support our families, then we can support our economy and the society. So this was one program which I liked. And Sandeepji, thank you for inviting me on this program.
And it's completely my pleasure. Thank you. Yeah, it's my pleasure completely. No honor. The honor is all ours. And, there are a whole lot of people waiting out there, waiting to hear how they can sit at home and, get smart and learn to make money. And you're the money man who's going to tell us how to do that.
Thank you. Look, let me start with a brief introduction of myself. I'm a chartered accountant, Paresh Desai. Okay, I have 25 years of the chartered accountancy experience, but it is a little diverse. I've practiced for income tax and audit for around 3 years. I was in my father's business of printing and offset printing. Then I have got an experience where I was to coach CA students also. And last many years, I am into this field of coaching for stock market training. Okay, stock market training is one of my passions. I've got a huge portfolio. I've got different portfolios, but other than that, the satisfaction which I get is from when I teach my students, and my students come and tell me that yes, I made so much profit. This is my ROI and all. So that satisfaction is something which I'm always looking out for when I, at the end of any program. So the current scenario is that everybody wants to know what is stock market, but lot of sometimes mistake about what is the stock market. So if you see what are stocks, they are nothing but it is like a commodity. Okay, so it is a commodity where you can buy and sell, but commodity would be putting it in a very broad thing. because commodities you can buy and sell. When you buy at a lower price and when you sell at a higher price, you make a profit. So same thing here, you can buy the stocks. Stock is nothing but the equity shares, what I'm talking about. So if you can buy the equity shares, you can buy in an IPO, like the one on IPO of, you must be knowing that Yes Bank IPO was closed today. So you could have subscribed for an IPO of Yes Bank, or you could also buy from the market, which is the secondary market, which is their NSE and BSE. Okay, so you can buy stocks from there, and you can buy at a lower price, and when the price goes up, that time you sell and you make profits. So that is in simple terms what is stocks basically. So they are equity shares which are tradable, but you need to have a bank account and you need to have a dematerialized account, or basically demat account.
Yes, Paresh, as we discussed, we would also give an overview, a primer in terms of, if you could really explain what are stocks and how are they different from mutual funds, for instance. There are a lot of people know about mutual funds because they really get advertised a lot. Nobody really advertises buying of stocks, but a whole lot of people are advertising buying of mutual funds. So could you help the audience in trying to figure this one out?
See, mutual funds is something, I'll call it like a community buying. Okay, so what mutual funds do, you don't know exactly how to invest, where to invest and all. So mutual fund is like a community investing, where the mutual fund managers or the mutual fund company, they will collect amount like 1,000 on somebody, 2,000 on somebody, 10,000 on somebody. Okay, and each unit is of around 10 rupees, which is called as the net asset value. So they find out, they'll give you that, okay, the 1 unit is the net asset value, or NAV it is called. They will have number of, it has to be in multiples of that NAV. So they will collect money from the different people, and if they put it into the market. Market means what? The stock market. So again, mutual funds also, there are two types. One is a equity mutual fund and one is a debt mutual fund. So if the money is collected, and when the money is collected, at the onset only, if it is given that, okay, this is a equity based, then all entire money would be going into the stock market. And if it is a debt based, then it will be going to the debt market. Debt market means basically the loans or the government securities and all. So there the returns are less, maybe around 6%, 7%, but more of a guaranteed sort of. But in the share, if the mutual fund money is invested into the shares, then the returns could be a little higher, around 10% or 15%.
Right. So very interesting. So let's move on and get more into the meat of the subject. And I would like to move on to the next question. So what's the next question that we have on screen?
See, basically, when we say whether you should be choosing, okay, is this one that what we should choose, whether stocks or mutual fund? See, mutual fund, if you invest in mutual fund, it is like you are giving your car to somebody else to drive. Okay. Now, how does he drive? Whether he knows how to drive or not, it will depend upon how good or bad he is. But ultimately, what happens? The mutual fund money goes into the stocks, which goes into the stock market. Correct. So instead of buying indirectly through a mutual fund, I would advise that it is better to invest directly into the stocks, because mutual funds, they are not giving this service for free, right? So they will be having an input load, they'll be having an outflow load, they'll be having their own expenses, and these expenses and these charges would go to reduce the returns which you would actually get. So if you invest directly into the stocks, then you make much more than what you would if you are investing into the mutual funds.
Interesting. Okay, so here's the other one.
So benefits of investing in shares, right? So yes, so benefits of investing in shares, as I said, compared to mutual funds, it is much more higher. I'll be showing in the slides later on that the returns in a year through the mutual funds, in fact, the last 1 year, the mutual funds have given, and most of you must be experiencing already, that they are given a negative return because there are certain restrictions. But at the same time, if you see other stocks, okay, if you see directly, if somebody who is invested directly into the stocks, the returns have been as high as something like 50%, 70%, even 100% every year. So if you are invested, let's say X amount, within 3 years, it has become like 2x or 3x. And these are all good companies. I'll be showing you in the slide later on that how that can be possible. Now, I'll be sharing you with this something called as this Warren Buffett mantra. Okay. Now, since we are come on to the topic of investing, now investing, how does one invest? I would ask you to look at this chart or this graph, which is going like in the waves. Okay, if you see this wave, it's very interesting. When the price goes up, okay, if the price goes up, there is always some sort of greed coming into the market. People are, like, don't want to have more and more money. They don't want to miss that bus because they've heard, okay, mutual, like stocks investing can give us a lot of money and all. So here people would start buying, but they don't realize that the markets work on waves. It is not that it is going to go up. For example, I'll tell you that Reliance stock in 2017 was around a range of around 550, 600. And from 2017, from a level of around 600, right now, as we speak, yeah, in yesterday it had touched a high of 2000. It has touched a high of around 2000, 1980. So can you imagine from 600 to around 2000? So that comes to around three times in around 3 years. So which is giving us an average annual return of around 100%. And
Wow.
that is not the only stock. Believe me, Reliance is not the only stock. There are many others. I'll be sharing later on.
Okay,
Where how to recognize?
yeah,
Hmm.
before you go forward, that the question in everybody's mind
Huh,
generally comes,
huh.
when you get this feeling that you missed the bus. Arey, I should have bought it earlier. Now it's already 1,000. Should I buy now, or is have I missed the bus? Is there no more growth left for me? And this is it. That is
Okay.
that feeling that everybody comes, that they've missed the bus and they try to look for something else. What's your
Okay.
advice to people like that? To the
See,
rest of us?
buses miss the bus, but we have to remember that that is not the only bus. If one bus goes, another bus is going to come, right? So same thing happens here in the stock market. Amir Khan is got this thing that we should not, like bus or something like a bus. He should not wait because if one bus goes, another one is going to come definitely. And that is what happens here because when you see, look at this graph, after the greed, if somebody buys and then the price goes down, okay, that is when the fear factor comes in. Okay, and the
Yeah.
fear factor you would have seen that in before March in 2000, in February 2020, this year only, the price was somewhere around of Reliance was somewhere around 1600, then it dropped around 1500. And then when there was a fall in the market, it fell to almost little less than 900 rupees also. That was just on 23rd of March this year. And from 23rd March, a level of 900 and today up to 2000 rupees. So imagine within 3 months, so April, May, June, July, just 3.5 months, the price has bounced back by more than 100%, and it has touched 1980 yesterday. Okay, so but what happens was when there is a fear, people would sell here. That is what the problem is. Okay, whereas that is the time when you should be buying. So if there is a greed, that is not the time to buy. That is the time to sell, my dear friends. And when the prices fall, that is a time to buy. When you see there is a fear in the market. So Warren Buffett has got this simple mantra: be fearful when others are greedy, and be greedy when others are fearful. When there is fear all over in the market, that is the time you should be picking up good stocks. Because understand one thing: these are companies which are functional. Okay, Reliance, Tata, Birla, all these good stocks. If you see, Bajaj, all these group companies, they are good functional companies. They are not going to close down. Their valuations might reduce and increase, but when these valuations reduce, you should be there to pick them up. Okay, so those who do that smart decision, they make money. But again, how to decide when to buy, that depends on something that's study which is called as a technical and fundamental analysis.
Yeah, the other thing is, people, all of us, we love to try to time the market. This phrase is there. Everyone thinks you need to buy at the right time. When it's down, you buy,
Right,
and then
right.
it goes up. So timing the market is a big issue. Sometimes, a lot of us feel that, like I say, we miss the bus. But anyway, so coming to our next question, yeah, and I see you already have this. This is a big one. How often should one trade or invest?
See, trading or investing, basically, these are two coins of the two sides of the same coin, I would say. You could be a trader also, and you could be an investor also. Okay, so how often, it will depend upon entirely upon what type of a person you are. So if you are a investor, long term investor, you need not invest every day. Okay, like when you saw a dip in the market and you see that, okay, that this is the time when they are giving the buy signals as per the study. If there's some indicators are there, some signals are there that, okay, this is the time when the stocks are trying to go up, you could just buy at one time. You need not buy every day into the market. But If somebody is like a trader is a person who would be more involved into the market more frequently. Like he could be trading every day, or he could be trading every week. So there are something called as a day trader who would buy in the morning and probably exit by let's say 2 o'clock or 3 o'clock. And whatever 2-3 rupees he gets in the, or whatever 5-10 rupees, or sometimes 50-60 rupees also. For example, like Reliance, it has gone up considerably today, almost like what, around 60-70 rupees. If it has gone up today. And if you bought 100 shares in the beginning of the day into 70 rupees, that means you have made what, 7,000 rupees in one day. Yes, that is the type of money the traders make, like 5,000, 7,000 every day. And there are 25 days to work in the market. Market is closed Saturday,
Wow.
Sunday. But five, so almost like 20 to 23 days the market is on. Every day you are earning 5,000, 6,000. That turns out to be good amount. And these are
Yeah,
particular
that multiplication is very mouth watering. Yes,
yes.
but it also has the risks involved. Yeah.
Yes, but then again, you have to understand that this is no joke. It is a proper study. It is a proper trade. See, to become engineer or become a doctor or a CA, how many years do we study? We study like 10, 15, 20, 25 years also. A person who becomes a CA, he has studied to 25, 30 years, 22, 23 years on an average at least. An engineer around 25 years from the schooling, around 15 to 20 years if you're studying. And then you take a job or business. But there are people who think that I can make money into the stock market without even a little bit of study also. That is called as gambling. Okay, so you should not do that. You should study properly, which is based on the technicals, fundamentals, understand how things work, and then we should go ahead. So often, how often again would depend upon what type of person he is.
Yeah, this is another
So
question
the
that comes in. Yeah, what is the difference between trading and investing? A lot of times people get confused. It's like you're buying and selling. Are you buying and keeping? Are you buying and So what exactly is there a difference? And if yes, what it is, and how do we find this out?
See, trading and investing, basically, as I said, trading would be a short-term phenomena where you trade. It could be a trader, like you buy in the morning, you sell in the evening, by afternoon, evening, or you could buy it in today and then you could sell after 2-3 days or something. Okay, so a trader could buy or sell in a very short period, and he'll be called as a trader. Why? Because he is more frequently into the market. He sees an opportunity. Okay, this is the time I could buy, and it's going to go up by 30-40 rupees. He would buy only for that section. Okay, and he'll make the profit and he'll exit from the market. So those are traders who take small profits. Okay, there are investors who don't have that much time to look into the market every day, every hour, every 15 minutes, right? They'll say, I don't have that much time, but I want to take advantage of the markets, of the stock market, because he knows that, okay, so and so person who had bought shares 20, 30, 40 years. Okay, many of the we know that Gujarati, Marathi communities and these communities, especially, if you find that they have been investing since like many years, 40-50 years. Their fathers, grandfathers have been investing, and now if you see the type of the value addition which is gone, it is like mind-boggling. It is unimaginable. Okay, so how the trading would be a little short term, but investing would be long term. Like it could be starting from minimum 3 years, 5 years, 10 years, even 15, 20 years. Also, you could keep a stock, and then you see it increasing.
Yes. So this question is primarily only for mutual funds, if I'm not mistaken. But please, could you explain what is this SIP that
SIP,
everyone keeps talking about?
SIP simply means systematic investment plan. Okay, so systematic would only mean that the frequency is fixed. So you could either invest into a mutual fund every month. So what happens is you give your bank account to the mutual fund manager. You could be investing as small as, let's say, 500 or 1,000 rupees every month, and every month that value would get deducted from your account, and those many units would be bought into the mutual fund. Okay, so that is SIP. But I would advise, rather than putting your SIP into a mutual fund, you can also do the same thing with the stocks. For example, you might decide, okay, I want to invest every month 5,000 rupees. So instead of indirectly going through a mutual fund, you could invest directly into a Reliance, you could invest directly into a Colgate, you could invest directly into a Dr. Reddy's. All these stocks which are there, these are all top class stocks which are, those are the stocks which are will be trending. So those stocks, once you understand, okay, these are the stocks which are going up every month, just a simple study of around 15 minutes also can let you know then yes, this is the stock which I have to invest, and every month you could go for a SIP in the stocks also. So SIP would not mean, normally it is meant as for mutual funds, but you could do it on for the stocks also.
Yes, but just a quick question here, Paresh. I understand, these banks and mutual funds, they have, you have an automated system where you can, do this thing and it happens without, interference once you set it up. For stocks, I think you have to go and do it manually yourself, right? There's no such automated system for investing in stocks, unless you have a broker and so is
No,
there anything like that?
There is, the automated system is there for the mutual fund. Similarly, your broker also could be giving you an automated system for the SIP into the stocks. Okay, like if you have some, like most of my broker, he has got an SIP into the stock. So if I say that, okay, every month, but there it won't be on the base of amount, it will be based on the number of shares. So if I say, okay, every month, come what may, at so and so date, let's say on 1st of every month, you buy 5 shares of Reliance. Okay, so on that month, on that day, 5 shares of Reliance would be bought in my account, whatever be the price at that time. Okay, so if I know, okay, that this is somewhere around, Reliance is going around approximately 2000, and 5 shares would come somewhere around 10,000 every month I want to invest. So you could put a order into the broker account also, and they could buy also. So there is an automated system there also in your broker's account.
Okay, so that also works. There is a
Yes.
question that has come up. I'd like to just show that. Yeah. There's a question from Jayesh, audience. Jayesh Shah says, for selecting an intraday trade for next day, what are the best parameters to screen and say, oh, okay, we are ahead of ourselves right now. But okay, you could probably answer this question here, and then we can go back to the fundamentals a little later. Yeah, so go ahead.
This is a part of the fundamentals, so we'll handle this little later on.
Okay,
but good question, Jayesh. We'll definitely handle this and as much as possible in the scope of this program. So next one,
sure, we'll do that.
What is the minimum amount to start investing? See, minimum amount would be the amount which is required for only one share. Because now, given in the dematerialized format, or demat account which we say, everything is electronic. Earlier, you had to buy minimum number of, let's say, 50 shares of 100 shares, whatever was the physical share certificate quantity of that particular company. But now, no longer that is the case. Now, even you can buy even 1 share of Reliance, you can buy 1 share of even MRF, you can buy 1 share of Tata Steel, and even 1 share, whatever is the price. If it is, let's say, even 10 rupees is the price, then you could buy 1 share at 10 rupees also. For example, like Vodafone is somewhere around 10 rupees, Vodafone Idea, around 10 rupees. So you can buy 1 share of Vodafone also. So that is the minimum amount which you require to invest in the stock market.
Okay, let's come to the meaty question now. Is now a good time to buy or to sell? What's your take on this? Everyone wants
whether it's a good time to buy or sell would depend on a simple thing which is called as the technical analysis and backed by fundamental analysis. So what is technical analysis? See, if you say over a long-term period, I would say that the markets are going to go up only. Okay, the long-term period, it could be 2 years, 3 years, 5 years. In a long-term period, if you select a good company, the stocks is going to go up. But when the price was, then tell me one thing, when the price of Reliance was 1600, 1500 in February, was that the right time to buy? Or when it came down to 900, was that the good time to buy? Or when it started going up 1000, 1100, 1200, and today it is around somewhere, yesterday it was somewhere around 2000, is that the right time to buy? Now, all that is covered by something called as the study of your price technical analysis. I'll be showing you some screens later on, that how to understand what is a good time to, first of all, what is a good stock, and secondly, what is a good time to buy. So if you understand these two aspects, what is the good stock, which stock should I invest in, and secondly, at what level, from the stocks, from the technicals, then that is the thing which would make you perfect and will reduce your losses and can earn you a lot of profits.
Okay.
As I say always that, technical analysis, or we'll put up the next question, answer lies in technical analysis of the stock market, which I already told you. And people, unfortunately, think that without any training, I can just invest in the stock market, and then they lose and bleed heavily. Okay, either you listen to the news or either you listen to the tips, and if that is the only thing which you are depending on for buying the stocks, you are going to lose. Rather than that, I would say that you should invest properly in learning Okay, invest. I'm saying investing. That is the word. We are not saying expenditure. You have to invest in your learnings. You understand how the markets work from based on the technical analysis and fundamental analysis. See, if you want to drive a car, if you buy a brand new car, are you going to take that car out without knowing how to drive a car, without knowing what is the clutch, what is the brake, what is the steering, how to do that? You go to a first motor
Yeah,
driving school, right?
that,
You learn how to
that's
do
a
it, and
good
if you
analogy.
got a brand new car, you're going to first try it out on your friend's car probably, or probably a second-hand car or some old car which you already have. You know,
Or generally the driving school cars, so that's the one. Those
yes,
are the ones that
driving
we learn
school
on.
cars, you say,
Yeah,
oh, please give me some more lessons. I want to practice more before I take my own car out on the road. Okay, so you'll practice on an old car and then you're going to take your own car outside. And that also because you require a license from RTO, right? Yes, that you know how to drive and only then you take the car. Unfortunately, in the stock market, you don't require any license. Okay, so that is,
yeah,
I think that is the unfortunate part. I think everybody who wants to invest, he should be made to take a test and he should be given a license there so you can invest. And that's when when he can actually make money. Right. So, but unfortunately, that is not there. Everybody is investing without any license, without any trainings,
yeah.
and that's how most of them are making losses.
Yeah, a lot of them just
So,
think that I can buy and sell and that's it. So there's nothing else to it. Yeah.
yeah,
But
everybody is
so
buying.
let's
Let
move
me
on.
also buy.
Yeah, right.
So, which stock to invest in would again depend upon your study because there are so many good stocks, so many bad stocks also. There are some good stocks which are turning bad. There's some bad stocks which are turning good, right? Because we have seen the waves. So the waves would be applicable when the prices were going up. That was a good stock. When it came down, but it did not go up again, and it started falling and falling and falling, then that is a bad stock. So probably you have to avoid those. I will be seeing in the charts later on that how to understand which stocks to buy or to sell.
Yes.
As I said, the technical charts, okay, are important. See, technical charts nowadays, this technology is a boon for us. Okay, right at a click of a button, you get to know the prices of the stocks, which was today, yesterday, 1 month ago, 6 months ago, 1 year ago, 10 years ago, even 20 years back. What was the price? Instantly at a click of a button. Imagine if you had to make this study on your own based on the newspapers or something. You would have to scan through hundreds and thousands of newspapers every day. What is the price of this particular stock? But now it is available everything on your desktop at a click of a button. So this is a boon of the technology, and everybody should be taking benefit of this. So I'm showing you a chart here now, which is of Nestle. Okay, so this Nestle chart, which is here, you see that it is going from left to right of the screen. It is going up, but is it going up in a vertical? Is it going on in a linear fashion? No. When it went up, it has come down also. Again, it went up, again, it came down. Again, it went up, again, it came down. Don't you think this is resembling the waves which we saw in the Warren Buffet the same clip?
Yeah,
So that is what is happening. So when the prices are going up, don't buy at that time. If you bought at a lower price, probably you could sell. But later on, when the price comes down, okay, for example, in the 2017, what you see, the price had come down over here. At that time, the price was just 6,000 rupees. So somebody who has invested 6,000 rupees in 2017, now in 2020, so 18, 19, 20, within 3 years, this 6,000 rupees has become around 17,000 rupees. So somewhere around 2.7, 2.8 to 3 times of the value which you invested 3 years back. But is that any other investment avenue which could give you that type of returns? At least I don't know. No fixed deposits, no mutual funds, no PPF. Nothing gives you that type of returns. Maybe when the like the real estate may give you, but again, real estate is highly, you can say, illiquid. So if you want to sell something, you have to wait
yeah,
for 3 years, 4 years, 3 or 4 months before you can get the money in your account. But here it is instant. You sell something today, the third day the money comes in your account. Okay, and the type of returns also, if you see here, the returns are huge. Provided again you understand how to learn this.
yeah. That's another question that keeps coming up.
What
People
is
keep
the
saying,
stop
what is
loss?
the stop loss?
Stop loss
Yes.
is a common word which you hear. Okay, stop loss, stop loss. Now this is a part of the discipline. Okay, see, this is a market, and markets can go up and go down. Also can go up, go down. Over a long-term period, if a stock is good, it will continue going up. But it does not mean that it will always continue going up. It might come down also. But whenever the trend, you have to understand the trend, something called as a trend. If the trend changes, okay, there is a uptrend, which is a bullish trend, which we call, and there's a downtrend, which is a bearish trend. So if the uptrend or the bullish trend, if you see that this trend is now winning, or let's say it is changing from bullish to bearish trend in the long term, it is better to exit. And that is the point of exit is called as a stop loss. Why? Because if you have already made the profits, then it is, you don't want to lose those profits back again to the market. So that is the time which you exit. That is called as a stop loss. So sometimes even for a short trade also, let's say you buy at 100 rupees and you expect that the price might go to 130. So 30 rupees becomes your profit, and you might feel okay that if it goes below 90 rupees, I will exit, because at 90 rupees, I think below 90 it is not little safe, because probably you could see some technical indicators like supports and resistances or certain trend lines and all those. These are some technical words which I'm throwing, but that is the part of the study. So if you see that, okay, 90 rupees, it may not go below 90, but if it goes below 90, then you'll say, yes, your stop loss was hit and it is better to exit that time.
So one question before we move forward. How does one determine, okay, which is the stop loss? Everyone has a wish list as far as the price is concerned. Okay, I bought it at 100, it should go to 120, 130, 150, depending on the time frame and the script itself. But how
Yes.
does one, is it a hypothetical thing that, okay, I am willing to bear only maybe 10% loss? So does everyone decide this for themselves, or is there some technical science behind it that if you have 30% higher, you should have 15% lower or 10% lower? Is there a formula or something for this?
There is a formula which I have devised. See, there could be
Okay.
for different formulas, but I am a little conservative when it comes to the market. I don't want first of all, any of my participant students to lose money. So this is the
Right.
formula which I advise them, and they take the trades only when they see a risk reward ratio of 1:3. Means if the risk is one part, reward should be 3 times of your risk. Okay, only then you can
Okay.
take a trade. Otherwise, don't take the trade. See, markets are there to stay. Markets are not going to go anywhere. They were there so many years back. Every day is a different opportunity. Every day you'll find opportunity in so many stocks. Okay, so there is no hurry, no bus going away, not coming back again. Another bus, another bus, another bus. They are going to keep on coming and coming. Okay, so even if you miss out on one bus, don't, like for example, yesterday we had seen that Infosys suddenly went up by 100 rupees. But again, today there was another opportunity to buy at a lower price also, right? So even if the buses have gone, don't worry, the another bus will come. And if let's say one bus is gone, you can always go to another stock also. Now coming back to the risk reward ratio. Risk reward ratio would mean, as I said, I give an example, right? 100 rupees you buy, and you see a ratio return of up to 130. So you think, okay, 30 rupees is my profit. And if it goes below 90 rupees, 10 rupees would be my loss. So I invested 100, 30 rupees is my profit. But if I lose out, 10 rupees is my loss. So that takes it to 10 rupees as compared to 30 rupees. So 10 rupees is my loss or my risk, and my reward becomes 30 rupees. So that is 3:1 reward to risk ratio. Okay, so unless I find that my reward is 3 times of what I could lose, I don't take a trade, or we don't take that away trade. Let us take in the probability. Now see, this is market, things go up and down. The probability of, let's say, and the probability of 50-50. Let's say 5 trades go in your favor, 5 trades go against your favor. Okay, so all the 5 trades which go in your favor, you are making 5 into 30, which is 150 rupees. But 5 may go against you. So when the trade goes against you, make a loss of what? Only 10 rupees. So 5 into 10, 50 rupees. So 150 profit against 50 rupees loss. So in spite of you going into losses, you are still net profit of 100 rupees. So those are the trades, if you understand, then you can safely trade in the market, or you can safely invest also in the market.
This sounds like if you do your homework well enough, you probably won't make a mistake. Is it as good as it sounds like this? Because you make it sound so simple. That you can't go wrong in this. Does it actually happen? I mean, I'm asking from a lay perspective.
I think so that you cannot go wrong, because the type of trades which go correct, okay, are almost sometimes 70 to 75%. Okay, my students who are trading regularly, their ratio is in the ratio of 7 to 8 trades are going correct. So if they're getting 7 to 8 trades, so this is even higher than the probability of 50-50 which I showed you. So if your 7 to 8 trades are going correct, 2 or 3 trades probably are going wrong. If they may go wrong. See, markets are there which are going up and down. We have seen the wave. So sometimes there is possible that you make losses, but when you make losses, you make small losses, and when you make profits, you make huge profits, right? So end of the day, if you see that you turn out to be in profit only. The smartest people who understand this, okay, they become billionaires. I'm talking about the billionaires of the world, or the billionaires of in India, who have made their money, and their lives. They have changed other people's lives also. And these are the peoples of what in the likes of Warren Buffett, Rakesh Jhunjhunwala, and many more smart people. Okay, they are the smartest people. For example, like Rakesh Jhunjhunwala, everybody knows that he's made his money through the stock market. Okay, he's also a CA, and he understood how the company works, how the stock market's prices work. So one of the stocks, only one stock of Titan, he had gathered this at an average price of rupees 3. That was when in around 2002 and 2003. This was in the recently, it was in December 13, 2019, Economic Times. So you can check it out also. But that is a known fact too. This is just one of the companies. There are many other stocks also. And did he invest just 100 or 200, 300? Obviously, he is investing shares at that particular price. Today, the price of Titan is crossed more than 1,000 rupees. It had gone to a high of around 1,400, and today it is in the range of around 1,000. Look at the chart. I'll just show it to you. So you see that the graph has started from the scratch. That was around almost 20 years back, around 3 rupees, 5 rupees, 10 rupees. But did it go up straight in a linear fashion? Obviously not. It went up, down, up, down, up, down. But these are all long-term investors. Okay, he has not sold when it got doubled or 3 times, or he has not sold when the stock became 50 rupees or 100 rupees. Okay, if had he sold at 100 rupees, would he have made this type of money? Obviously not. So this is a part of long-term investing, where a person invests over long-term period, and he understands but that how he has to continue. Now, the stock which is going up like this, okay, these are the stocks which you continue being in the market. But whereas I might show you some other stocks like this one, if you continue remaining in this market, just look at this stock which was around 10 years back around 1,200 rupees. Okay, if you stick to this stock, what would have happened? The price had gone down to 10 rupees also. Now it is a little bit higher up, maybe 30, 40 rupees, but it had touched a low of 9, a little less than 10 rupees also. Stock which was 1,200 just 10 years back. So there is, people can lose money also if you identify. And I don't think it is very rocket science to understand this. Okay. Sometimes I've got students who are just 15 and 16-year-old. They can also understand this. And I've got students who are around 80 years old, senior citizens also. They also very well understand this. So if you understand what type and how to invest, which stock to invest, it is not that difficult, I would say. So that was a good, I think, good, you can say, a little insight on how to identify good stock. Okay. So I would be now showing you a list of all these companies. Just look at these stocks. Is it visible or no?
Yeah.
See, look at this list. There are just 12 stocks, and this is not the exhaustive list. There are many more stocks which could be, if not so, so much growth oriented. But there are many others. For example, this Astral, Abbott, Bata, Honeywell. All these stocks, if you see, I'll just take the first one because we are falling short of time. Astral, which was 300 rupees in January, became 600 in January 18. Then 19, it was 800. January 20, became 1130. Look at the last column, the one in the brown or red which appears. It is 266% in years. So that comes to what? Almost 80-90% returns annually. 200% Abbott in 3 years. 296 Bata, Honeywell, 22 Input Edge, Naukri.com, one of the sites. So look at the sign. The lowest I can see here is Pfizer, 125. But even 125% over 3 years, that still comes to something like 40% annually, right? So the lowest of
Yeah.
this, which we can say on
Yeah.
125, that is also
That's
good enough
that's
as compared to anything else. Okay, so
okay.
you could have one Pfizer, you could have some Abbott also.
Yeah, so the question is now: are these still good to have? Are these recommendations?
Yes, they are still good, provided you understand the trend. You remember I showed you the trend
That's right.
of Titan. So if the trend
Yep.
is growing, yes, these stocks could keep on growing and growing and growing and growing. Okay, but the day the trend changes, that is the time which will help you to understand. If you understand the technicals, you'll understand yes that the trend has changed, and that time you would like to book your profits. Okay. So, for example, in Titan, the trend has not yet changed. The trend is still up. That's the reason probably
Still
Mr.
going on.
Junjunwala is still holding on and he's still counting his
Uh,
profits. And he will continue
wow.
counting the
But
profit. Imagine 1,000 or 2,000 sometime. What might happen to his this thing valuation?
yeah, it's interesting. Paresh, tell me one thing. See, what
Yeah.
happens is,
Yeah.
the price goes up, and as you rightly said, who knows whether Mr. Junjunwala is still holding on to that stock or not. When does one decide to exit? So is it individual thing? Because,
Exit
like
at
you
the right
said,
time.
this can keep growing. So
Yes.
a stock,
It
unless
can.
I don't sell it, I don't make that money. Okay, it's actually meaningless for me, right? I mean, I bought it at 3 rupees today; it's 1,000 rupees, but it's still
Correct.
locked in the value over there. It's still not with me. I can look at
Yes.
paper and look at the charts and say, okay, I bought it at 3 and it's at 1,000 today, so it's great money for me. But it's not really money for me till I don't sell it, right?
Perfect. That is, you see that it is like virtual money. That yes, it is there in the bank account. It is as long as it is growing, my wealth is growing. But if I don't sell, it does not come into my bank account. It does not come in my pocket. Okay, it is there lying virtually in the market somewhere. Okay, suppose if I bought something at 10 rupees, it has become 20 rupees. My wealth has grown what two times? It has become 200%. In this case, I will give a simple tip to somebody who would understand this. That let's say you buy a stock of 10 rupees. For simple reason, okay, simple calculation I tell you. If you buy a stock of 10 rupees, it becomes 20 rupees. What you do is straight away go and sell half of that quantity. Sell away half of that quantity. Okay, what will happen? Your capital amount comes back to you, and what remains in the market is only the profit part. Okay.
Okay.
So even if later on that 20 rupees becomes 15 or 10 or 5, okay, then you don't feel the pinch about it. You won't say that okay, my capital is lost. Your capital is still intact. Okay. At the same time, if the profit keeps on growing and growing, you just stay with the profit. You stay with the trend. I would say one thing: the trend is your friend. Till the time the trend is
That's a
till the
that's a
time the
good
trend
one.
is going up and up, you continue going with the trend. The day you find that the trend is going down, which you can see from the charts, yeah, that's it. As simple as that.
Yeah, cool.
See,
Okay,
mutual.
yeah. Before we go ahead, we have okay. I think we'll come back to this. Saraswati
Uh,
is asking, where do you teach? Yeah,
yes.
so so Saraswati, CA Paresh Desai has his own venture called Sankalp Venture, and we will be giving out the details a little later at the end of the show.
Yeah.
But you could, since you've already mentioned this, we will contact you and tell you how you can reach him directly and get to
Most
learn this.
welcome,
There is
madam.
a workshop. There is a workshop that is being announced also. There's a workshop that's being announced, and the slide will come up a little later. Yeah, yeah.
And
Go
everything is
ahead, sir.
online now because of this situation. I don't go out.
Yeah,
Last 4 months, I've not gone anywhere. All my lectures are online, and
yeah,
everybody's enjoying even more because people are sitting at the comfort of their homes and they are learning and
there you
earning
go.
also.
There
Okay.
you go.
Otherwise, they have to travel 1 hour, 2 hours, go to the venue every day, then come back. So that traveling is saved. You're sitting in your
Yeah,
comfortable home and you're learning. This chart about mutual funds, I would just wanted to show you that mutual funds have the last 1 year, actually they have given, most of them have given negative returns, and for the 5 years period they have given 4 to 8%. So for the
oh,
long term, when we say 5 years, also if you are getting 4 to 8%, and which is just comparable to a fixed deposits or maybe PPF or something. Okay, so mutual fund going instead of going through a indirect route, I would advise people should go directly into the stock buying and selling. So as Sandeep ji was saying, I would like to just announce here that I will be having one intense workshop. It will be for around 2 hours next Thursday, which is 23rd July. So, what are the 5 biggest mistakes which of stock trading which you should be avoiding? That you
It's
can say.
interesting.
Sandeep, you would like to say more about this?
Yeah. So yeah, of course. In terms of all of those who wanting to register yourself for this, please say yes in the comments below, and we will have CA Paresh's office contact you and tell you how you can take this forward. Paresh, coming back to one of the other questions that was there.
Yeah.
Very interesting question. I do not know. Somebody wants to know. Sanj wants to know whether you are holding a few stocks of your own, and whether you can share what's in your portfolio. You have the mandatory disclosures that you have.
My portfolio is good. I see whatever is. I follow simple rule. Trade what you see. I see that a particular stock is going up. I keep on investing and buying it. Okay, I've got Colgate, I've got Reliance, I've got many others. I mean, how it's not possible to say everything, but there are some good stocks which I'm holding.
Right.
There are very good stocks also. Sometimes just by name also. Sometimes if you invest, okay, that this is a good stock, and if it comes down as a this thing you can go. But if you don't know the technical, sometimes you might enter at the wrong stock and that was the wrong time. So you could make
Right.
losses. So these
Yes.
are some names which I said that which I have in my portfolio.
Okay, cool. So I think we've covered a good amount of ground over here in terms of the basics, in terms of what one must do and how one must study the technicals to get things ahead and pick stocks and not go by based on general hearsay and tips and try to do the maybe Google something and get some recommendations. But
Yes.
what I would request you to do, Paresh, is to a lot of people out there would want to have some more information in terms of where they can contact you. So maybe if you could give out your number, I think it would be a
My
good idea
my
to probably
number
put it up on
would
screen.
be okay.
Yeah, go ahead.
So
You can tell me and I'll punch it on screen. Yeah.
okay. So you could put my number 98201
Yep. Yeah.
five
Go ahead.
nine
Five
three
nine
nine six.
six. Okay. There
I'll
you
repeat
go.
once again 98201
That's it.
59396. You could put a WhatsApp message
That's
and then we'll get back
that.
to you.
Is that the right number on screen? Nine eight two zero one
Yeah,
five
the
nine
number is
three nine
correct.
six.
Number is correct.
Yeah.
Sandeep. Yes.
Okay. So that's the number you can call him on, and you can discuss and don't just ask him for tips. Okay, he's not just here to give you tips, but you probably need to learn how to do this yourself, and that's something which I believe will help you to thrive and grow, and which is the objective of this entire exercise. I'd like to thank you, Paresh, for your time, and thank you for all the explanations and demystifying a lot of this issue. And so there is the bottom line is there's more money to be made in stocks provided you know how to do it. So so I saw your dig in the last slide which says sahi hai as far as mutual funds are concerned. So
Mutual funds, a
so
lot of
yeah,
publicity they have done with sahi
yeah,
hai. A
I
lot of
know.
people have been investing,
Yeah,
but
I
they have
know.
been not so
Yeah, I
happy
know.
with this.
I
In
saw
fact,
that.
I
So
would
I
like to
think
share one. I would like to share one fact with the audience here. That do you know
sure, go
how
ahead.
much percentage of people are there demat accounts which are there in India? We have a population of 130 crores. Can you imagine
Uh-huh.
what is the percentage? What is the number of demat accounts in India? Any guesses?
So,
It is just 4 crores. Only
wow.
4 crore demat accounts are there, and we have a population of 130. So, can you imagine the type of scope which is there when people are starting more and more, participation we have? And out of that, also, there are around 70, 60, 70, 75% accounts are dormant. They are not trading. So,
Wow.
the scope here is huge. I would like to end here one before, if there's any question, we can take one small story I remember. Once there was one shoe company, and they wanted to expand. So they sent one of their very bright sales executive to African country, and then they said that okay, please go there and check what is the scope for how whether we can sell shoes, what how much we can sell, how is the response and all that. So he went there, he landed there. Immediately he called up his boss, it is impossible. It's a waste of time. I'm coming back with the next flight. Okay. Why? What happened? Nobody here wears any shoes or any type of footwear. Okay. And he catches the next flight and comes back. Now the boss is not going to give up. So what he does, he sends another executive of another junior executive, and he goes to the same place. The person lands there and he calls up Amit and he's excited. Boss, best news. We are going to grow like anything. Well, what happened? Nobody is wearing shoes or nobody is wearing any footwear. Okay, so he's so excited. Look at the approach between the two people. Okay,
Yes,
so this is the
somebody
thing.
sees an opportunity. Yes.
Yes. So the opportunities, those who see the opportunity in the stock market, they are going to benefit like the second person who went there. And I am here to support them if they require anything. We are here to help you out. But even not, please participate. Please start participating in this wonderful, wonderful world of the stock markets.
Yeah. Okay, great. Thank you very much, Paresh. And we're done with our time over here. And to everybody else, well, I hope this session has benefited you. Please do like and share the video. And if you can like the page, you will be updated on the other upcoming programs that we're going to be having over here. Thank you very much for everyone. And Paresh, stay online. I'm just going to end the broadcast so that then we can
Thank you,
discuss this later.
Thank you, Sandeep.
Okay.
Thank you, everyone, for attending this program. Thanks.
Yeah, thank you very much.